luxury brands are battling the consumer slump. That consumer caution is spreading far and wide. The carryover effect is that mutual funds have been dumping consumer stocks. Michelle McCory has the story. Michelle.
Haas, mutual funds, pension funds, endowments, they are all unloading U.S. consumer stocks at the fastest pace in at least 14 years. They're getting rid of them as though they were those fake LV bags that you mentioned. Institutions controlling over $16 trillion sold $1.8 billion more of consumer stocks than they bought this month, and that's according to data compiled by State Street. David Rolfe, who's the chief investment officer for Wedgwood Partners, says that the consumer is simply tapped out and spent out. And according to the regulatory filings compiled by Bloomberg, investors cut stakes in Nordstrom by 3% last quarter. That is even as shares climbed 22%. And two retirement plans dumped a total of 26% of Fortune Brands shares. That's at the same time that the stock climbed 126% off the March lows. So an interesting phenomenon here. We did have shares of chain stores, car companies, and restaurant stocks jumping nearly 66% since the March lows. And the S&P Consumer Discretionary Index, along with financials, have posted the biggest gains among the S&P industry groups this year. So some believe that the run is over and it's time to get out, and that consumers will boost their savings rather than increase spending.
The consumer is going through some things that they've never really experienced before with the housing prices and 401k plans that have become 201ks. So there's some hesitancy on the consumer. What carried us in 1991 was very, very robust business spending. I think what we're going to see in this cycle is a very robust government spending program.
Still, some analysts are betting that consumers will be stronger than many expect. Bloomberg data shows that analysts have boosted their 2010 profit forecasts by 37% for companies that rely on consumer spending. And earlier, you just discussed Tiffany's. That has withstood the recession while competitors have dropped off. And a lot of analysts are saying some retailers like Tiffany's that have survived, the survival of the fittest, that it's time for them to shine. And they predict a big increase there. Haas?
All right, Michelle McCory, we'll leave it there for the moment.